Well, in national news, the amount of people working full-time in Canada has dropped. Our Ottawa correspondent Glen McGregor joining us now with those details. Okay, Glen, I'm wondering where the numbers stand and if there's a reason behind this.
Bit of a surprise here, Fiza. Economists were expecting Canada to pick up about 20,000 jobs in the month of June. Instead, we lost jobs, 1,400 jobs to be precise, and a larger number of full-time jobs lost, offset slightly by a small gain in part-time jobs. The good news is that the wages that people are earning are going up, increase of about 5.2%, which is, of course, far ahead of the inflation rate. A lot of that is kind of previously baked in because when inflation rates were so high, we saw so many people renegotiating the jobs. We've covered this a lot on CityNews, all the collective agreements that have been signed recently after negotiations for wage increases. So that's pushing up the rate. But the fact that we're losing jobs and losing jobs at a rate faster than, say, is happening in the United States. The U.S. today had job numbers out picking up about 200,000 jobs nationally, which is kind of about on par with what economists thought Canada was going to do. But this does suggest that the economy is slowing down, that growth is slowing down, and of course the unemployment rate now rising to 6.4%. That's the highest it's been in a little over 2 years. So all kind of read together shows that attempts to put kind of the brakes on the economy, which have been really accelerating very quickly as Canada came out of the pandemic, are having an effect. Of course, the high interest rate policy that the Bank of Canada has pursued over the last couple of years having a big effect on that. And it really does suggest that, yeah, things are kind of slowing down. And the job market, which has been very, very tight, is starting to loosen up a little bit. Now, look at the particular sectors, transportation, warehousing, that is sort of the movement and storage of goods. That is had the highest level of job losses, offset a little bit by increases in accommodation and food services. So hotels, restaurants, those kinds of things are picking up jobs. But overall, I think the big picture here is that the economy is kind of very slowly slowing down, Fiza.
You mentioned the interest rates there briefly. What does this loss mean for Canada's interest rates?
Yeah, of course, this is the thing that economists are looking at really closely, is to see what effect this is going to have on the overall interest rates that Canadians are paying on things like their credit cards, on their mortgages, on their bank loans, their lines of credit. All that is all going to be factored into this decision that the Bank of Canada is going to make on the 24th of July when it sets the overnight rate, or the key rate, which they have reduced the last time they set the rate by 25 basis points, so a quarter percentage point down to 4.75%. Speculation is now, we look at these numbers, it does suggest, absent the fact that wages are increasing a bit, it does suggest the bank is going to be in a position to cut the interest rates even further. That's going to be good news for anybody who owns a home with a variable rate mortgage or is going to renegotiate their mortgage around this time. But the other key piece of information that's going to come in about 2 weeks is going to be the next CPI data, Consumer Price Index data. It's really going to show whether inflation is slowing down or not. Remember, we got a surprise last time we had inflation numbers. They actually had gone up a little bit for the month of May, and that surprised folks a fair bit. And this is kind of, it's all kind of a little bit conflicting information. And of course, Tiff Macklem, the governor of the Bank of Canada, and his directors are going to have to read this information, decide which way they're going to go with the next rate cut. We'll be watching that really closely on the 24th of July, Fiza.
Okay, and we'll check in with you later today and on the 24th. Thanks so much, Glen.
Thanks.